Now in Johannesburg, the 51st General Assembly of the World Federation of Exchanges is in its second day. Samantha Loring has been covering the event for us. She caught up with Oscar Oneyema, who's CEO of the Nigeria Stock Exchange. She started off by asking him what needs to be done to facilitate short selling on the market in order to help cushion investors against falling equity values in Nigeria.
Short selling goes hand in hand with securities lending, and there's no securities lending in the Nigerian market today. So we are going to introduce securities lending and short selling. We are working with different members of the industry, stakeholders, to bring about this new development. We think that securities lending is going to make the market more efficient for those long-term investors that hold on to their equity or to their fixed income for that matter. Without trading, they can get more income by lending the securities out. And those borrowers that have a view that a company is overvalued, for example, that might want to short the security, can do so. We're going to ban naked short selling, so you have to locate the security before you can short it. We're also introducing a market making program. We would allow the market makers in the course of bona fide market making to naked short sell. So that is the only exemption.
You're also working with a South African investment firm to introduce an exchange-traded fund in Nigeria. Just tell us about this initiative, when you expect to have ETFs listed and what type of ETFs.
We're expecting that our first ETF will be listed this year. Since we're working with an issuer, we want to be sure that the issuer is comfortable before announcing their name and what the product is. But suffice it to say that it's not going to be an equity underlying product. We think that if we're able to bring this product to market this year, it should give another alternative to investors that are looking to diversify their exposure while still remaining in the equity, in the capital markets.
Tell us about some of the other products you're looking to introduce on the Nigerian Stock Exchange and what needs to be done to make sure that you do meet this goal.
We would introduce exchange-traded funds this year, and then we would introduce options by 2013, and then financial futures. There's a network effect that comes with all these products. People are able to better manage their exposure to the different asset classes, and they're also better to take more risk because they have the tools in place to manage risk. What are the things we need to do to get to $1 trillion? The Nigerian capital market does not reflect major sectors of the Nigerian economy. Agriculture accounts for 40% of GDP, less than 1% of our market capitalization. Upstream oil and gas, we're known for oil. Upstream oil and gas accounts for 0%. So we would need the major oil companies and the state-owned company to come to market in order to get to 1 trillion.
And telecoms companies is also another
Telecom companies, more than 80 million subscribers from Nigeria. The majors are not listed. So we would need them to come to market as well. And then the power companies, utility.
Why aren't they listed to date?
Problems we've seen in the marketplace, especially with corporate governance at the exchange. We're changing all these things. We've imposed significant standards with regards to corporate governance. We are beginning to drive transparency and improving our processes and enforcing our rules, and we're going to be coming out with even more rules to make sure that we have a marketplace that is world-class. Another problem that some of these companies have talked about is lack of liquidity and debt in the marketplace. So things like market making that we're introducing, securities lending, allowing companies to do company buybacks, are all things that should help in making the market deeper and more liquid.